So in this video, we're going to talk about market structure and how this comes into the day-by-day trading approach using the smart money methods. I use structure in two ways. We have continuation and reversal. When we are trading continuation, we are looking to buy with an uptrend or sell with a downtrend. And we do that by actually buying from demand zones or selling from supply zones in previous structure lows in the market. So if we look at this example, we have an uptrend, we have the low point, we have a higher high, higher low. This normally forms us a demand zone, and then we get a bullish push, which breaks the structure. We already learned about this at the beginning of market flow, remember? Then the market pulls back down, and we are looking to buy from this point, okay? And this is where we're going to really get our entry in, because we have had a confirmation of the structure with a bullish move up. Now we're obviously looking to utilize supply and demand for our entries. So in an uptrend, continuation trades simply going to be buying from demand zones while the market continues to print higher highs and higher lows. So eventually a continuation trend is going to come to an end, and we're going to get a reversal. Reversals often look like this, and this is how we trade reversals. So we get a higher high, higher low, higher high as usual, but rather than getting another higher low in the market, we're going to get a lower low, taking out the previous higher low in the trend, okay? So what this does is actually show us the market is now shifting direction, and we will then generally look to sell from supply zones either in the extreme point or somewhere within the structure, as these do often form in the structure, to then bring the market back to the downside. So on the flip side, this is what the trend looks like this way. We would have downtrend continuation and then downtrend reversals, which are bullish reversals, taking us into upside moves. So these are the two ways that we are wanting to use the structure we've learned about to actually find trades and execute trades on a day-to-day basis using the smart money approach. So what we're going to do now is head over to GBP/JPY, the actual candlestick chart, and I'm going to show you some nice examples of this approach happening in the market, both bullish and bearish, so you can see how the structure works and whereabouts we are looking to get our entries in. So here on GBP/JPY, I'm going to show you the general trend continuation and reversal patterns and how we are actually looking to trade them, where we would be buying or selling from in the market using our smart money approach. So we can see, first of all, a downtrend coming to an end. We are on the 30-minute time frame. Another quick pointer before we get into it is these methods work on every single time frame. I've probably mentioned that before in the course, but it doesn't matter if you're trading the monthly chart or the 1-minute chart or anything in between. The methods I teach you do work across all time frames, okay? We're going to get more into that later in the chapter, but for now, let's keep a focus on structure. So getting into it then, we can see the downtrend has come to an end here with a lower low, lower high, lower low, but then we actually had a higher high form here, which broke the structure. After the higher high, we came back down, tapped into the demand zone at this lower low, and then began moving to the upside. So what this has done is put us into a bit of uptrend continuation. As we can see, we've had a bullish break of structure here, showing that we are continuing to the upside. Now, if we can get another bullish break of structure, we could then begin looking to buy from the near-term demand zones, the most notable of which being this one here, okay? So if we just play price forward, we will indeed see that we do get a bullish break of structure, and then the market comes into this demand zone, retests it very nicely, and then begins moving to the upside. So as we can see, a nice continuation trade, okay? What we'll be looking for now for the next continuation trade is once again a bullish break of structure. If we can get that, which we have, we can then look towards the next demand zone at the extreme point of this move, at the higher low, so to speak. So as we can see, we are looking for higher highs, higher lows, and then looking to buy from the higher lows after the next higher high. When we know the trend's intact with a new higher high, we can happily buy from the higher lows using the demand. So in this example now, we formed once again another higher high. We can anticipate the market is likely to come down into this demand zone and then form a reversal and move to the upside. As we can see, that has happened once again. Now we are looking for a bullish break of structure, which we do indeed get. So at this point, we may look towards a demand zone like this. Now remember, it's not always going to work perfect. We're not always going to get the zone we want. But what we can do is actually just allow the market to play out, see if we get any other clear structure points. I can see here, after we've come down and formed this low and pushed up, we now have a bit of liquidity leading into this demand zone, which has cleared itself as a pretty clear structure low now. So if we could go and break this structure, I'd be interested in then buying from this demand zone that we've just covered. So as we can see, we've had a bullish break of structure, making this the next significant swing low. So if the market comes down into this point, we are likely to get a bullish reaction. And as you can see, we trade into that zone and then we do indeed get a bullish reaction. Now at this point, the market does begin shifting to a downtrend and forming a bearish reversal. Now this is the first point where we see a shift in the trend. So this was obviously our most recent higher low, okay? But what we've actually seen now is this has been broken by a lower low. So we now have the high of the market, a higher low, but then we have a lower high and now a lower low. So we could expect that if the market does come back into the previous points here, we could look for selling opportunities to take the market down. Now, in this instance, we don't quite get the tap, as you see, and we do begin moving down, but we do indeed form some significant structure on the way down as well. So if we just mark out this supply zone, because we've had a little bit of consolidation before a large push down, and allow the market to play out a little bit more, we may indeed get a nice tap in and go for a sell opportunity to the downside. And as you can see, we do indeed get that. So what we've seen here is a shift in the structure from bullish to bearish. You saw the trading opportunities both ways. Most of these are continuation opportunities. We had a buying opportunity here, we had a buying opportunity here, and we had another one just here as well, before the trend then reversed. Then we had one missed selling opportunity, and then another successful selling opportunity to the downside on this pair. Now at this point, if we watch the market, what we do indeed get is, first of all, a lower high, but then we get a break of structure, forming a new higher high in the 30-minute trend. So at this point, we may look for buying opportunities. If the market was to pull back into some of these high interest zones, the extreme of the new higher low, we could indeed look to buy this market and take it back to the upside. As you see, we do indeed get that. And then we get a nice steady upside continuation with a nice few opportunities to the upside as well. So at this point, we may look towards a zone like this. And on the way up, there are some nice buying opportunities on GJ. Even if this market was not the cleanest, we did get a very, very clean entry from the low point here, which, as you can see, came in with no drawdown. So what I've done now is plotted on some example trades using some refined zones and actually using the standard zones as well to actually show you the potential of the continuation trade and reversal trade opportunities. So as we can see from this first example, we have a continuation tap in, a nice 6.61R. So if you're risking 1%, that's 6.6% profit. Another opportunity with zero drawdown, 7.42%. Another opportunity here, which is most likely a break even, but let's call it a loss just for the sake of showing you the power of the risk reward we can get. So that is a minus 1%, a plus 4.2%, and a plus 10%. So as you can see, we have amassed over 20% profit, almost 25% profit or more, with 1, 2, 3, 4 wins and a single loss. So this is how we are using market structure in the trading. Everything is going to come together, don't worry, I'm taking it one step at a time, but soon you will see the power of the smart money approach that we use, and you'll see how this market structure can be tied into your everyday trading, along with, of course, supply and demand and other aspects to actually bring you amazing results. So this has been the structure video. We are going to move on now and talk about some other aspects of technical trading and get you deeper into the action and deeper into the learning.